Hello, trading is closed on October 14th, 2021. Just a review of the rules. This is my trading plan for tomorrow, October 15th. I can be completely wrong, and any trade you make should be at your own risk. Yesterday's call was killed before the open. I didn't think much of this rally, and I said unless we gapped and promptly took out this high, we should see lower prices hit a target of 43, 45, 29. Here's what we said. Unless we gap up smartly, we should see the lower target. We gapped up smartly, so that never printed. Time doesn't run out till tomorrow morning, but I think it's pretty unlikely it'll print by then, and we'll have to add it to the list. I said I didn't have any higher target. I referred to higher targets I thought we could reach. I didn't think about this one from October 7th, 44, 22, 44, but it did print, was resistance, then it was support, so that one we cross off the list, just as tomorrow morning we'll have to add this one onto the list. Doesn't look like it's going to print anytime soon, but neither did that one, and the system says it should print at some time. We have a new target from today's pattern, 44, 29, 65. Just a reminder about the rules. I make plenty of calls which get canceled. I don't make many which fail. Canceled calls don't cost anybody any money. During the day, MEJT said this rally's false, gives a target of 44, 29, 65. We came close to hitting it, but never did. When you come this close, there's normally support under the target. That support's been really tested twice. It increases the chances it'll print, and it increases the chances, if it does print, that the support normally found under it won't hold. Here's the daily chart. We bumped up against the 50-day moving average, which is this line, and we're right near this orange line, which is the TD-ST line. Those are resistance areas, and for the rally to continue, you'd really like to gap over those areas. If you don't, it increases the chances resistance is going to hold. We've already broken through resistance from the FOMC announcement price. Typically that separates bull markets from bear markets, but it needs confirmation if, and I'm not saying this will happen, but if we promptly reverse back under the line, this breakout doesn't count. Otherwise, we've broken through significant resistance here. It increases the chances we'll break through the resistance I just mentioned. This is how I'm counting this. It hasn't been killed yet. So far, here's your drop in what we're calling wave blue C. It's close to a 61.8% retracement. So if we stop here and reverse, another drop becomes plausible. We continue much higher, threatens to kill the idea, break over this high, and it's a good thing I left parentheses around the count because, as I've said, until some of these lows fall, can't be certain it's the right idea. Still not certain how to count this, but if we do stop here, you can count 5 waves up. You get an ABC with good fibs. You have to go to the 1-minute chart to see that's a leading diagonal triangle, but it obeys all the rules, and you can count this as 5 waves up. So if we stop here, and I'm not saying we will, but if we do, it's a plausible count. And if we start down in style, then you'd have a red wave B ending here. But of course, that hasn't happened yet. We continue higher, that kind of kills the whole idea. That's what the bulls have to do. We gapped up, hit higher highs, closed just barely under the midday high. If we're going to build on this rally we had, it shouldn't really be too hard to gap and promptly take out today's high, which is what we need to do. That would be a sign that the lower target, 44.2965, is less likely to print in its referred time frame, which is tomorrow. Gap up high enough, you've broken through further resistance. It's possible the whole idea of a correction's going to fall on its face. But if instead this holds, we have a wave count compatible with this being the last gasp of the rally, because we have 5 waves up. This might not be the only count, but if it works, it's not hard to see us correcting. Don't know if that'll work or not at this point. Tomorrow's pattern has the early high, doesn't mean you won't gap down. Typically, it's a bearish day with a final hour low. These things have a cyclical nature, and recently an unusually large number of these days in the cycle have gone up instead of down. And when it goes up instead of down, it usually leads to more advances in the days to come. So it's a bullish pattern if we get follow through, and it could be quite bullish. But if instead you reverse right from this point, it's quite the opposite. There's a lower MEJT target. Unless we gap up smartly, it's favored to print tomorrow. We gapped up at a higher high, closed under the midday high. This should lead to lower prices printing tomorrow, unless we gap and promptly overtake today's high. Doesn't guarantee a lower close. We overcame significant resistance when we gapped over the price of the FOMC announcement. The break needs follow through tomorrow to be valid. Rallying further would be expected to overtake the 50-day moving average and the daily TDST line as well. And if that happens, the all-time high is in danger of falling in days to come. But reversing strongly at this point would complete the bearish wave count. So I think tomorrow's open is going to be very telling. Bulls want to gap over this. We start down with conviction. This is a candidate for the end of the up move. And that's today's call.